What are property tax rates going to be for the upcoming fiscal year, and what can you do to make sure you're not paying more than you need to? We're going to talk about that coming up next. What's going on, friends? Dylan Onaka here with the Buy Big Island video blog, and this week we're going to talk about property taxes. And first and most importantly, I'm going to remind you that if you are a resident here in the county of Hawaii, or maybe a recent home buyer, make sure that you have filed for your homeowner's exemption, because that is due at the end of the month this month. So June 30th is going to be the last day to get it in for it to take effect in January of next year. So there's a 6-month lag for those exemptions to take effect. So if you don't get it in, you're basically going to pay the current rate for an entire year until you get it in the next period. So make sure you have a couple more days to get your homeowner's exemption in if you haven't gotten it in yet. And if you are not aware of the homeowner's exemption, it basically lowers your tax rate from 1.1% to 0.615%. So it almost cuts it in half, and then it also will exempt 20% of the taxable value of your property up to $80,000, and then you also get a $40,000 exemption from the taxable value of your property. So it really, in effect, ballpark, will decrease your taxes by about half, as opposed to paying the regular residential rate, which is what you will pay if it's a second home, if it's a vacation rental, any type of other property other than a primary residence. And you do have to live in the home 200 calendar days out of the year, and there are a few other requirements like filing a state income tax or having an exemption for that. So if you have any questions about that or need more details, I can send you the brochure that has all of the breakdown of information that what is required to qualify for the homeowner's exemption. But you definitely want to do that and don't pay more taxes than you need to. Okay, so the second part of this is we're going to go over the tax rates for the different categories on the county of Hawaii. So every county in the state has a different county and a different tax rate and a different breakdown of what the categories are and what the rates are. So they vary from county to county. If you want that information, I can get that to you if you are looking at Maui or Kauai or Oahu. But I'm going to go over what the Big Island rates are so you have an idea. They don't vary widely. They're all kind of around 1%, other than the homeowner rate, which is 0.615%. So the important thing to understand here is that they put out the tax rates as a dollar value per $1,000 of taxable value. It's not a very easy way to understand it, so I try and convert it into a percentage so it's a little bit easier to understand and take in. So when you get the brochures, it's always going to say like $6.15 out of every $1,000 of taxable value, and so that is essentially 0.615%, right? So it's a little bit easier for us to wrap our head around that and calculate it as opposed to the way the county puts it out. So starting from the top, the ag rate is 0.935%. So there's a common misconception that if you get the ag rate, it's going to be less than the homeowner rate, and it's really not. It's a little bit less than the regular residential rate. But if you are on agriculturally zoned property and you have a home on it, it's your primary residence, you'd rather have the homeowner rate, which is 0.615%, which is obviously lower than 0.935%. The apartment rate is 1.17%. The commercial rate is 1.07%. The conservation rate is 1.15%. Not a lot of people have conservation land. Again, the homeowner rate is 0.615%, so that's the lowest rate that you can get. The hotel resort rate is 1.155%, and then the regular residential rate for everybody who owns a home that is not a owner occupant is 1.11%. And then there is a second residential rate for properties that have over $2 million of taxable value. So this is a new rate that they recently came out with, but that is 1.36%. So if your property, which again is not very many of us, has a taxable value of over $2 million, you would have to pay that rate. The other piece to all of this people always ask about is, how do they figure out the taxable value? And obviously the county has tax assessors that do that, but they're not always accurate or reflective of market value. So you can't necessarily look at the taxable value of a property and then decipher what the market value is or other types of values. So sometimes they just take what the last sales price was and use that, and then increase it by 2% every year. But you will see that assessed value can vary kind of widely from property to property based on when they last assessed it, when it was last sold, and other things. And there is a process to challenge your assessment if you do not agree with what the county is assessing your property at. And you'll get a notice that explains how to do that when you are notified of what your current assessed value is for that taxable year. So if you have any questions, as always, feel free to reach out in the comments or send me an email at dylan@buybigisland.com. Please like and subscribe to the channel. And if you have any questions, always reach out and get you all this information in more detail. I appreciate you guys watching, and I'll see you guys next week. Aloha.